inspiring me since 3 months ago, and I've been starting a little bit. So I've seen the results of working out. Thank you, Maxine. The next speaker would be myself. So I'm gonna. Do you want to be first? No. Okay. Then I'll be the next speaker. So please help me welcome myself. Fellow Toastmasters, tonight I'm going to talk to you about what most people see as one of their lifelong dreams: owning their houses outright. To pay or not to pay off your house. Who here thinks that that's a good idea, to pay off your house as soon as you can? Please raise your hand. Eddie, perfect. Somebody else?
I didn't hear the question.
The question was, do you think that it's a good idea to pay off your house if you own a home as soon as you can? All right. So most people actually believe that's a good idea. For those who do not own a house, I would highly suggest you do it. You purchase the place where you live at, or you would like to live at. All right. So that would be the first one, because you get two of the biggest tax deductions. The interest that you pay on the house, on the loan, is tax deductible. For example, if you get a loan for $200,000 and you pay a 6% interest rate, in a year you get to deduct $12,000 from your income. All right, because you paid interest on that loan. So that's one of the biggest tax deductions that people get. So that would be the first thing. And then another deduction that you get from owning a place is the property taxes. So anywhere from $2,000 to $20,000 in average here in the city of Chicago, you get to deduct that every year that you own the property. So those are two of the biggest deductions. So if you don't own the place where you live at, think about it. You should own it because you get great deductions. Now, going to the paying off your mortgage or not paying it off. All right, most people think that would be the great thing, so that you don't have to worry about mortgage payments, right, Eddie? Isn't that what comes to mind when you think about paying off your house? Most people just don't like the hassle of sending mortgage payments. They say, well, if I get over with this, I'll be just fine. Well, for those who think that you should pay off your house as soon as possible, I would highly suggest you think about it. Think about it. I know this is not normal advice. Most people say you should pay off your house. That's the common advice. But in reality, it's not a good idea. And there are 3 reasons why you shouldn't pay off your house. First one, you let go of your biggest deductions, what I just mentioned. Once you just pay off your house, once you pay off your house, that deduction is gone. Most people end up paying their houses by the ages of 50, 55, or 60. By that time, their children are grown up, so they don't have those deductions. They don't have their children as the deductions, right? So their children are grown up, they don't qualify as a deduction, the house is paid off, they don't have the biggest deductions are gone. So most people think that by the time they reach retirement age, their tax bracket is going to be lower. It's the contrary. Their tax brackets tend to be higher. Why? Because they don't have those deductions. All right? So that would be the first reason you shouldn't pay off your house. The second reason is banks do what is called arbitrage. Arbitrage means that they take money from people that have, if you have a checking account or savings account, or if you pay off your house fast, if you send them money, they take that money and they don't sit in it. They actually take it from you. Do they pay you interest on a high interest on a checking account and a savings account? No. Do they pay you interest on the mortgage payments that you're making? No, they don't. So they take the money from you and they lend it to someone else. Those people who are actually asking for loans, card loans, mortgage loans. So they take the money from you, pay you 0 interest, and then they arbitrage the money. So they make the difference. Does that make sense? So does it really make sense to work hard, send extra home mortgage payments, work hard, send those extra mortgage payments so you pay it off, and then once you really need that money, you have to qualify for the loan. You know that? That once you, like, let's say you have equity on the house. Let's say your house is worth $300,000, and you only owe $100,000. You have a $200,000 equity there. if you need that money, what do you need to do before the bank can lend it to you? You have to apply for a loan. You have to show proof that you will be able to pay off the loan, right? And the bank is the one who makes the decision to lend you the money or not. So you're asking the bank to lend you your own money that you worked really hard to put in there. Does that make sense? Does it really make sense to have to do that? Now, I'm not saying do not pay off your house and consume the money. No, no, no. What I'm saying is, let's say your plan is to send $200 every month towards your mortgage payment. Put them in another account, maybe a retirement account, maybe a life insurance policy with cash accumulation. Put that money in other places where you're making an interest, okay? Don't consume it. Put it there so that if in the future you want to pay off your house, you have enough money banked on the side. Or if in the future you have a necessity where you need money, you don't have to qualify for a loan. You have it on the side. Does that make sense? So that would be the second reason. You don't want the bank to work your money. You can work your money yourself. You can invest it instead of paying off the mortgage. That's why it makes a lot more sense to have an interest-only loan. That way, if you pay only the interest on the loan, at the end of the year, you get to deduct that interest. All right? And then that extra money that you were going to send to pay off the house sooner, you just invest it somewhere else and you have it available whenever you need it. And then the third one would be creditors. Okay? Creditors are a big deal. If you do pay off your house or have a big equity on your home, and for some reason you get into trouble, let's say someone sues you and wins the lawsuit, the first assets that the attorneys are gonna go after, home equity, checking accounts, savings accounts. Now, if you, instead of paying off your house, you put that money into retirement accounts or other accounts and doing other plans, that money is protected from creditors, okay? So I've had so many cases. Right now is the example. A lot of people work really hard towards paying off their houses. They lost their jobs. They couldn't continue paying the taxes, for example, if they already had paid the house off. If they couldn't pay the taxes, guess what? The Uncle Sam is going to go get the house really quick. Why? Because it's paid off. So, 3 reasons. Paying off your house doesn't really make sense. First one, you let go of the biggest tax deductions. Second of all, help me here.
You're not working your money?
You're not working your money. The bank would not pay you interest on your money. And third, creditors have access to your money, to your equity. In other words, before paying off your house, read, get information, get some financial advice. We can tell you what strategies to follow to control your money instead of giving total control to the bank.